Good afternoon to you, to everyone who's live. We are today live on EPS platform, YouTube, and Twitter. Welcome all. Welcome to the COVID Special Value Series. We conduct this live webinar every day with subject matter experts of the financial industry. It's our way of showing solidarity along with you to fight against the deadly COVID virus. Today, we have Mr. G KANNAN to talk about the challenges that COVID-19 poses for the banking community. He himself is a banker from State Bank of India. He was also the CEO of IBA, that is the Indian Banks Association. He was also the CEO and COO of SBI Capital Markets. Welcome, Mr. Kannan.
Thank you, Mr. Kumar. It's been a pleasure to be asked to speak in this particular series. I have also been listening to many of the other participants, other panelists. It's been a very useful interactions, and I think a lot of insight into the various issues facing the various industries following the COVID.
Yes, thank you, Mr. Kannan. It's a privilege to have you with us. As you know, Mr. Kannan, the COVID-19 pandemic could be perhaps the most serious challenge to financial institutions in a nearly a century. Maybe the 2008-9 disaster that we had could be close to this. But as the economic fallout spreads, retail banks will find themselves juggling some big priorities while also recalibrating for the future. It's going to be tough, we all know that. But concrete steps that banks can take to support the communities and customers they serve while positioning themselves for the post-COVID era, which will have its own challenges, I guess, right? So we have challenges right now during the COVID period, and we have challenges post the COVID era, which will have its own kind of challenges. So investor sentiments are perhaps at an all-time low, and it's also becoming evident how difficult it is going to be for banks all over the world to maintain good assets and good earnings due to the shutdowns and income slowdowns. So what were earlier considered as good assets, we felt that these accounts are good assets, now suddenly look a big risk to almost every bank. So we will talk about the challenges ahead of us. And so we will kind of break it down into two broad areas, the macro view and the micro view. So my first question to you, Mr. Kannan, is what are the key shifts caused by COVID-19 in the various functions of banking, giving access to credit, deposits, and moving money?
First of all, as you rightly mentioned, anything which has happened this time is directly or indirectly affecting the banks. Be it the direct credit or be it the remittances to be made to the poor people, everywhere the banks are involved. In fact, along with the doctors, I think these are the bankers are the only one who are virtually working 24/7 in their offices and meeting the customers, arranging for cash, as also taking the deposits, making the transfers, everything. In addition, like I mentioned earlier, they've also been there in the payment system space, ensuring that the money reaches the people as and when the government has been given. They also made available the funds to all the depositors at the time they wanted. They also ensured that the people who had money also could deposit the money. So for anything to do with the finance, of course, the bankers were involved. And I think they came here in all kinds of issues facing them. They were not in a position to move around and do the collections properly. They are not in a position to do open new accounts, etc. But having said this, now this COVID has a lot of challenges as also opportunities. Challenges are future is absolutely not clear. It's not clear what will be this the volume of the business which will going forward, whether they'll become viable. And we have seen in the past, both in the 97 crisis, in the 2008 crisis, etc. And the business was going on, and all of them were given some sort of a restructuring or some sort of a respite. And despite that, I would say, though they did come out of it after a few years, the immediate fallout of that was that there was a huge burden on the bank, on the businesses, because of the additional funding they had taken. So one of the issues, as you rightly mentioned, is the risk being perceived by the bankers on account of additional funding to be given to the business, which they normally would require, or even the moratorium which is being given for 3-4 months, which appears to be a relief. Actually, it becomes a big burden, in as much as this moratorium is not for a period of 3 months. It is actually a postponement of the 3 installments for the remaining tenure of the loan. For example, if it's got a 10-year loan, so 3 months is actually be postponed by 10 years, therefore the accumulated interest. So these are the concerns which the bankers have, whether the person will be in a position to meet the additional load on them on account of this. Having said this, I think there are many ways where the bankers can actually assess the demand, assess the requirements, and I would say whatever has been done in the last 4-5 years, the fallout of the demonetization, the increase in the digitization, and increase in the payment space where digital payments have been there. Even today, I think if you can go to the retail shops, if you are in a position to find out whether they have got a X amount of sales in the pre-COVID period, on that basis, you can actually fund them on a 6-month or a 1-year basis. I think going forward, the amount will not be, the loans will not be based on future sales rather than actual sales in the past. It will actually say, okay, 6 months you have done a sales of X amount, I'll give you 75% of it, which becomes a self-liquidating nature. And then the additional limits, in fact, I would actually say the banks will actually have a dynamic way of assessing the limits. Saying every 3 months, it will start looking at the past sales, and the sales have gone up, it will increase the limits. And if he has been regular and making payments, reduce the interest rates. Therefore, there will be more incentive for people to actually go and receive payments through digital mode. But one issue which is actually facing the bankers is they don't see the demand coming up. In fact, even before the COVID, the issue was there is no demand. Demand is coming down. There is no new industry which has come up. So with the result, the credit offtake has been the lowest in the last so many years. And that is a big concern. But I still see a ray of light, because COVID could be actually a shock, as also an opportunity for all the bankers, for all the people to be a bit more careful. But at the same time, you sitting at home, you can actually start spending. The expenditure has actually gone up in the retail space. Forget the garments, etc. But in the household sector, the expenditure has gone up considerably. People have actually done almost everything online. And I just wanted to mention this, which I told Mr. Tagarajan also. I'm in Pune. In the last 2 months, I have only spent 100 rupees cash. So which is basically mean that even the sabji wala who comes only for 20 rupees and 10 rupees dhania, he takes a UPI payment. So this actually is a cultural change which has been benefited because of this COVID also, where actually I go out in the morning to purchase anything only with my mobile phone and maybe a card if necessary. And that's enough. So this is something, a new way forward, where it will be purely cash flow based basis. Yes, there could be issues regarding the smaller ticket ones. There's no track record. I would say even the large amounts, everywhere it will be purely cash based, and expenditures will be monitored almost on a minute-to-minute basis, almost on a daily basis. And that is way we can ensure whether there is any diversion which is taking place, or any fresh infusion of funds which has been assured. So I think the monitoring mechanism will be much more closer, much more faster. And that is one boon which I see post the COVID. And I think restructuring is going to be the order of the day.
Yeah, thank you so much, Mr. Kannan. But I think I agree with you. The credit offtake is worrying. There has been no major demand coming away even pre-COVID, and after COVID, we would see many of the businesses closing down. Really fighting to survive, at least in the immediate term, if we call it. And so, how will that credit offtake will happen? I think it's a Would you suggest some measures by which this credit offtake can pick
Fair,
up?
I'll tell you. I think, most of the people have money for the basic necessities.
Yes.
Basically, say groceries or your normal purchases like your vegetables or even your electricity, etc. But
Yeah.
what is happening is the other consumption expenditures are absolutely died down. You don't have people going to spend and buy even clothes. You don't have people going and buying shoes and other things. You don't
Yes.
see people going buying cycles afresh or even buying cars, etc. I think an incentive system has to be given for companies, corporates, everyone, saying that if you buy a new vehicle, you will have 150% depreciation benefit. And if you are profit, therefore, they are spending 1,000 rupees and they're getting 1,500 benefit. So means there's a cash savings. And therefore, that will give an incentive. The government should adopt measures of ensuring that expenditure is done so that they themselves also get benefited on account of the GST. See,
Yeah.
every sale is actually a revenue to the government. So it's not to be seen as only an expenditure; it's a revenue to the government. So the velocity of the money, the higher the velocity of the money, the higher is going to be the income of the government by way of the GST collections, which keeps coming. So if you buy a vehicle, then you have that person placing orders for the equipment. Then down the line, the labor is there, and that fellow again starts spending. I think
Yeah.
to kickstart, there has to be a booster by way of money given by way of incentives. I would even say that, suppose you go somewhere and they give you a coupon of 25,000 rupees and say you have to spend it within a period of 2 months, and you cannot spend on groceries, you cannot spend on this, you have to spend on anything. I'm sure all of us will go out and buy something which may not be necessary immediately, but something which will be useful. That will kickstart the demand. I think kickstarting the demand on a continuous basis is necessary. Government is concerned about the fisc, but I would say for now, I think put that aside, see that the demand is kick-started, and that will ensure that the velocity increases, and therefore you get a more of collection, which will in turn enable you to repay the additional fisc risk you have taken.
Okay. So I think your one of the solutions you're suggesting is to incentivize the consumers so the demand kicks in. I think it's absolutely valid. I'm sure.
Not only consumers, even the producers or
Producers.
even the big buyers, and the producer
Yeah.
had to be told, you produce more than we'll do this. I think incentivization should be given such that over a period of 3 to 5 years, you are in a position to kickstart the economy in a very, very big way. We are really in a good position. But as I told you, before the COVID also, we were on a down scale. Therefore, we have a lot to do about incentivizing the people.
Excellent. Thank you so much, Mr. Kannan. That's a good insight into the problems of the banks, and also your suggestion to kind of kickstart the economy to come out of this low credit take. So thank you so much. So just as usual, I want to tell all my participants, this is banking. So I'm sure there's lots of questions to ask. So you can start putting in your questions in the Q&A box, and I will try to get it across to Mr. Kannan as much as possible. And so let me take one question from the participant, Mr. Kannan. It may be a little. It says, how will banks access the cyclical business going forward?
Sure, cyclical business has been there in the banks have been following it, and have also been affected, has also benefited out of this. We have had cyclical issues in the auto sector, in the what you call steel sector, in the cement sector, in the real estate sector. I think it is a part and parcel of it. It's not possible for us to always identify well in advance that the down cycle has happened or the up cycle has happened. But today, I would say almost everything is in at the bottom. Therefore, going forward, it's either up or at the same level. So, so opportunities are huge. Even today, as we speak, I think the demand for cement has gone up, but the supply is not there because if your factories are closed. Now you're going to have a time lag because of which there's going to be a demand, and therefore the prices go up. And the higher the prices, the manufacturer is incentivized to produce faster. So you have the cycle which will benefit this. Once the economy by way of construction starts, then you have the steel sector happening. Once the steel, so it is not a question of one sector always being benefited. It is a combination of various sectors. And luckily for us, for the last 2 years, I think the monsoon has been quite benevolent. And therefore, the demand from that sector has also been quite good. And hopefully, touch wood, I think this year also, if the monsoon is okay, we are going to have a scenario of a boom, subject, of course, the COVID reopening. And even as I speak, I think, the aviation ministers announced the start of the airline from Monday, though in a limited way. I think it augurs well that things are moving in the right direction. We have a lost 2 months, but I think we need to start quickly and see what actually happens about the spread and see how we can actually tackle it.
Yes, I think the airlines is a big factor to restart the economy, and I think they have put the SOPs on as to how you would go with the airlines starting their flights. So you've been in the State Bank of India, so as a public sector bank, and we all know that public sector banks have played a very crucial role in the development of the Indian economy. Of that, I think there is little doubt. What are some of the measures needed to augment their contribution towards the rebuilding post COVID-19?
And thank you, Mr. Krishnakumar, for having actually acknowledged the role played by the banks, because very often they have always been pulled up for all the NPAs and all the wrong things which can happen. Rarely are they being commended, except in a passing occasionally, about the role. In fact, I would say most of the industries, most of the large accounts, most of the constructions which has happened, good and or bad, positive and or negative, have all been only on account of the public sector banks. They have taken big risks. They have taken good risks. They have been lucky in many cases. They have been very unlucky in many other cases. Very often, I think they have come to the forefront partly because they also represent the government about financing projects which appear to be partly risky, but which appears to be absolutely essential. We would not have the kind of quality of airports today, what we see, but for the support given by the public sector banks. We would not have the kind of power availability, but for the support given by the public sector banks. We would not have even the telecom sector, much, I would say, the much maligned sector in the sense the bankers have also been maligned everywhere. But the fact that today I'm in a position to have this conversation with you in a free, a very quick manner and in a short duration with a lot of clarity is all because of the revolution in telecom and the benefits and the support given by the bankers in this. I think the bankers will always be there to support this. But going forward, I still feel instead of leaving, deciding on the basis of what is required, I think they should actually have an appetite to analyze the requirements on the basis of what is realistic. In the past, we have done a lot of funding on account of power sector projections made by the government. And it all went haywire because neither the front nor the rear was connected and only the body was available. The factory was available. You didn't have the linkage to the coal and you didn't have the tie with the discounts. And therefore, you are left high and dry. I think these are all things which has to be seen. The government has a big role to play to ensure that the smooth STP takes place and there is a continuity of the funding. Here, there's one particular thing which I would actually expect is the government has a very, very big role to play. Not only the kickstarting of the economy, in ensuring that all the expenditure they have to, all the payments they have to make is made payment of time. I'll just give you an analogy. About 15 years ago, 20 years ago, when we were junior officers, whenever a person comes to me and says, Mr. Kannan, I've got a project, it has been order from the government, I used to be thrilled. Fantastic, government means payment is assured, everything is good, and there's no hera-fairy. And therefore, we used to finance them. Today, I would not touch them. I'm being very candid, I would not touch them because I'm not too sure whether the payments will come on time. This is be it is BSNL or NHAI or this. And that is something which you have to ensure if it's the government, the payments does come on time. And if that happens, I think, again, the velocity of the movement of money, the money comes in and the stress which the small entrepreneurs face will not be
Yeah.
there. I think that is where the banks will have to focus on having a full type of from end to end, from the purchase to the sale and the realization. They should be in a position to be convinced that the money is coming. Today, I project about 2 months of receivables, and the actual receivables go to 6 months, and the whole thing goes for a toss. So this is one of the issues which is facing most of the companies. So they said, no, sir, this is industry which is on credit. Fine, sell it for credit for 60 days, and you get after 120 days. So the entire economics go for a toss. I think that is some focus which has to be done about receivables management, realization, and how the banks can actually tell the promoter and or the buyer that we have to ensure that the cycle is continuing.
Thank you so much. I think currently you have put two suggestions forward to the government. One is incentivization across the board, which we talked earlier, and now on the payment side, that the receivables have to come through quick. On the second, I wanted to ask you a question, but I'm like my Q&A box is getting full. It's like flying. So many questions are coming, so I need to take. Otherwise, I will miss out on some participants' questions. So I'm sorry, it may be something a little out of the track that we would like to follow with you, so that we weave a story together. But I need, because there are so many questions, I need to ask some. So Rupal Panchal is asking a question, Mr. Kannan, that what will be the volume of transactions on cards versus UPI? And the second question is asked is, do you think that transaction on RuPay card will increase more than UPI?
Sir, whether it's UPI or RuPay card or in credit cards, I basically believe in the digital payments. So I'm not very concerned whether it's a RuPay card or is it an UPI or even internet banking. So it is only a question of which is being used. And whether it's RuPay or not, it doesn't matter so long as the person starts using it instead of going to the ATM and drawing the cash and holding the cash and then going and making payment, and that fellow receiving the cash and again depositing in the bank. So that this cycle can get reduced regardless of what it is. And depending on the convenience of the person, I am a person who never believed in UPI at all, who never believed in debit cards. I've always had either a cash or a credit card. Now I can tell you, I vouch for 99.98% only UPI. And in fact, so much so that, my all the credit cards and debit cards have gone into my drawer, not to be used at all. So that's the kind of comfort. And Pune, if you come, sir, you don't need to have anything except your mobile phone.
Yeah.
Even the what I call the tender coconut fellow, he'll accept UPI.
Yeah.
You can understand the extent to which it. So therefore, it's all the question of availability. RuPay card will be available. You need to have either POS machines or some sort of a QR code. So I think it's a question of the other infrastructure to be made available. If the other infrastructure is available, everything will go through.
Everything. Absolutely. So I think the same.
RuPay card, sir, I think in the rural areas will play a big role.
Yeah.
And the only thing is we need to have the small machines available. But if the person is in a position to have a, nowadays smart cards are very, smart phones are priced pretty low. So most people will be in a position to upgrade themselves to smartphones. And then the UPI, which is only a sticker, is the cheapest and the fastest way of communication or the remittances.
Okay. Yeah. So talking about the POS machines and the micro ATMs available. So I have a next question to you from Dhananjay from Evolute. He says, promoting micro ATMs will help banks in increasing the last mile transactions. Shouldn't banks increase micro ATM proliferation substantially?
I think any means by which they are in a position to reduce the brick and mortar requirement is always welcome. And I think the micro ATMs or the handheld ATMs are one of the best means. Many of the payments bank, I think the post office payments bank, they have actually given that to all the postmen who go with this, and all the erstwhile money order and all is being paid. And you can issue the money order and receive the money order, etc. I think that there is absolutely no issues about this. Why some of the banks may not be doing it, because maybe because of the cost structure, etc. But there is absolutely no doubt that this is a very good thing. In fact, it is something which is almost akin to the ATM. ATM has got a big paraphernalia cost, etc., which is
Yeah.
reduced in this. But having said this, again, I want to go back to myself. Why have an ATM issue at all? In fact, I would say I am one of the original followers. I have got a checkbook issued more than 6 years ago. I have issued 10 checks so far.
Yeah.
So which basically means you need to get into a online mode, and I think QR and AEPS are probably the way forward than even the micro ATMs. Or if you have this AEPS system, that's excellent.
Yeah. Perhaps he's talking about the rural areas more because, yeah, in urban areas, I think we have all the facilities, but the rural areas, perhaps we need to have a lot more the micro ATMs, I guess.
Yes. In fact, I wanted to mention it now that you have told me. We should encourage that all financing up to tier 2, tier 3 areas should be
Yes.
only on the basis of the credit in the account, which will reflect the actual sales.
Yes.
Below that, 4, 5, and 6, you should actually give them incentive. In case you do this, you will get a better rate or a higher volume. Therefore, you are incentivizing. But yes, it will take a long time before you convert them into digital. I think micro ATM will have its role in the rural areas.
Okay. Thanks, Mr. Kannan. So continuing with our macro view on this one, on the entire banking industry. So as you know, the banking industry has witnessed the rollout of innovative banking models like payments. There's so many payment channels have opened up. You yourself are using quite a few of them. And they also opened up things like the payments and small finance banks, as another way of getting the finances in or promoting the economy. What further innovative developments do you foresee in the future?
Sir, I think in the small finance bank is actually an upgradation of the MFIs, if I'm not mistaken, because and they also get access to what is called retail deposits in a better way. And of course, with all the constraints of a large bank of meeting CRR, SLR, but I think still because of the cost structure and the interest spread they enjoy, they are in a position to do it. One. Second thing is their cost structure is low in as much as they operate in very, very small towns, very, very small areas where they are in a position, they have a personal contact. The good old theory about bankers being the friends of the community. I think the small finance banks aptly play that role. I think they are doing quite a good job. Of course, they had a pretty bad start starting from the demonetization, and where for about 3 to 6 months they really had problems about disbursement, collection, etc. And now going forward, now again, then they had the GST, and then subsequently now the COVID. So I think they have just started coming out, and therefore the COVID is some sort of a dampener to some extent, but they have got a niche role to play. We do see that most of them are operating only in certain localities, some of them in the south, some of them in the east, some of them in the west, etc. And rightly so. They are niche players. They should be in niche areas rather than spread out thin all over the place. But if there is an opportunity, I think some of them can actually become a bigger bank by become a larger small finance bank, in the sense you have with a pan-India presence. That could be done through some sort of a consolidation. But I think their connect is on a personal connect. Even as I speak, most of the small finance banks are in a position to get 50-60% of the collection in March, April, and May, which shows that they have connect in the rural areas, connect in the small cities, and that is the way forward. Payments bank, I have my own doubt as to whether they become financially viable. They have their own issues, and we have already seen that many of them have given up their licenses because it didn't seem to be working out. Only a few of them are working. I still feel that to make it attractive for someone to deposit there, maybe a smaller limit of even lending could be permitted. The Reserve Bank has to take a call as to how to do this. Then they cannot be called as payment banks, but payment banks with some restriction on the lending. Otherwise, they are right now only putting it in G6, which may not be very attractive. But they do provide what is called expeditious payments, etc., through the mobile, etc. But I don't think so. They have got a very big role now to play. It can in small clusters, they can operate like a closed circuit payment system that could operate. You know, suppose you have a town of about say 1,000 or 2,000 people, and all the payments can be done through within the town. So you can have a separate card which can. I think Manipal College has this card which is done internally. It doesn't really hit the main account. So that kind of small clusters can be done by payment system. I don't feel the payment systems will be in a position to become viable in the long run unless they get tied up with certain other products.
Okay, so do you see consolidation, further consolidation happening to kind of to get away from this less efficient banks?
You mean the small finance bank? Small finance bank, as of now, I think it's some time away. But I think going forward, that could be a case depending on who has done well, who was in a position to raise funds. Because some of them are doing okay, some of them are still at the bottom. Some of them have even not gone public despite the timelines expiring shortly. So that could be a case for some consolidation. But I would say that it may not be, maybe one or two more, one or two can happen, not too many.
I was not referring to the payments and the small finance banks. They are new, so I'm sure they need time to kind of come to their full potential. And I'm sure there's a lot of potential in them. They will come through. But we have got established banks for long. If you look at.
Hello, can you hear me? I think I lost you. Hello. Hello.
Sir,
can you hear?
Now I can hear you.
Kumar is frozen. I think his question was, he was not referring to the small finance banks, but he was referring to the other banks, well-established banks. Because if you see, Reserve Bank has small banks, the payment bank, cooperative banks, district cooperative, scheduled co. There are many categories of banks. Don't you think so? When nationalized banks are getting consolidated, even these institutions should get consolidated. I think that was the question.
No, see, I think as you mentioned, nationalist banks have been fairly well consolidated, and I was very happy to see the consolidation personally, because I have been always a votary. There's no point having 21 clones of each other doing the same work everywhere, and then that way now they have reduced it to 11, which is a decent number. 6 of them are large banks, and 5 of them are the relatively smaller banks, but not very small as such. In the cooperative area, there are what we call pros and cons for consolidation. In the case of pros, yes, they can become a much more of a governance could also be established. But at the same time, the cooperative is supposed to be in very, very small towns. It's not supposed to be an all India based cooperative. So that way, I think they've all been established in say Thane or in say Kolhapur or Sholapur, etc. They don't really aspire to become a what you call an all India basis. Therefore, the requirement for consultation may be less because each of them cater to a completely different set of customers. Deposits are from a different set of customers. Lendings are to a different set of customers. But yes, some of the urban cooperative banks there could be a case of merger. But I think that there is a lot of issues on governance which has to still to be established before they can upgrade themselves to a full-fledged commercial bank.
Thank you, sir. Thank you, sir. That's very interesting. Not many basically will take on these questions, which is so bit difficult to answer with the given circumstances. As we were speaking, I think there was a news that the corporate India has lost about 25% of their revenues during this year, which means I think it's the impact, as you rightly said, in the moratorium, which is even if it is given for 3 months. And that impact also will basically affect the bankers per se, maybe for a whole lot of years because the extension of the loans and the interest factor and so on and so forth. With that in mind, what do you think the policy changes the banks should have? What are the policy interventions required to strengthen the Indian banking system?
Yeah, one thing is here, all the banks are a bit averse to even restructuring. Restructuring is a bad word now in the banking system, mainly because of the provisioning, 15% provisioning which has to be made, which is pretty huge. At the same time, I think they have no other option but to do the restructuring. So therefore, you are either way, you are caught between the devil and the deep sea. So I think the banks have to take a cautious view as to whether that particular project is viable, and in which case give a soft loan or give what is called interest-free fixed interest loan and get it over in case you really see that is some positives going forward. In the past, we have always been doing restructuring in the normal course because we felt, that's the one way of pushing the can down the line and then hoping that the economy will turn and the particular commodity price starts going up and they are in a position to come out of the situation. I think that kind of expectation should not be there. It should be more realistic. Anything beyond that could be a bonanza or a bonus, but more realistic as to the viability. Need not necessarily look at the last 2-3 months, but look at what has been the trend of that particular industry before the COVID, whether they have been performing well. I think restructuring has to be done on an expedite basis. There, we need the support of RBI of being a bit more benevolent about the provisioning because either way, the banks have to do the restructuring. I think they have no other choice. They cannot simply take them to NCLT, and even that door has been temporarily closed. Like the temples door, they have also been closed for another 1 more year. I think we need to do the restructuring. Banks will take the step, but a little bit of support from RBI could sort of nudge them to do it much faster.
Thank you, sir. KK has come back. So KK, over to you.
Thank you, Mani. Participants, I'm sorry I had to, there was a break in the network. Some of the Q&A I have tried to get it across. In case you have not got it, do send your Q&A to me. Karan, now let's look at the micro view. I think we've spent almost 40 minutes on the macro view. Let's look at the micro view of said. And it's often said that, we should never waste a crisis, right? So we have a black swan right now in front of us, but it's a problem, and many may look at it as an opportunity also. How can banks use to their advantage the norms of social distancing and say stay at home or branchless banking and WFM as it is called? Can the banks take advantage of it?
See, actually, in most of the cities, I think the social distancing is generally being followed.
Yes.
It's also been implemented. Initially, it was a bit difficult to implement, but once they saw the squares and the circles, and also some sort of even some places they have got the ropes and all to ensure that people don't come inside. I think to a large extent, the social distancing will be practiced in the cities. But the most difficult thing is going to be in the rural areas where all the payments come in the first week. The Manrega payments come, whatever the dole is there, which is coming, the DBT payments come. Everything comes in the first week, and almost everyone wants to take the money immediately. So that is an education process which we need to do. That you don't need to do it everywhere. And second thing, like I was telling you, if we inculcate the habit of spending without going to the branch, that is probably the best. And that's the only way forward to ensure that you don't have to go to the branches where you have this problem of crowding. And even the rural areas, you can practice this, but it's going to be a tough thing because you have a branch which is catering to some 35-40 villages, and everyone starts coming to that particular branch. It's going to be a tough order there. But as regards the cities, I think by and large you will find. In fact, I have seen about 5-6 ATMs. I'm not sure whether there's no cash or something there, but I don't see crowds there. It could also be that the people who are in charge of the ATMs are not filled up the ATMs with cash. But I do feel that it may not be necessarily the case because they are attached to the branches. But I don't see crowds there. Maybe because they've also understood, there are other ways of doing. And that could also be because of it is in the city. But in the smaller towns, it's going to be difficult. It is a Herculean effort, but I think everyone has to keep on repeating this. More and social distancing. In addition, you have to also practice overall hygiene, and that's the only way forward. Prevention, not necessarily cure.
Okay. Yeah. So participants, I have one more this thing. Generally, we take 1 or 2 questions directly. You can ask Mr. Kannan. All you have to do is raise your hands, and the back office will enable you to put through the call to him. So let me take one or two more participants' questions, Mr. Kannan. So it may be just a little off track from what we've been talking about. So one of the questions that comes is, in these COVID times, what measures should Government of India take to encourage manufacturing units to shift from China to India? You know, the shift of China to India.
Yeah, I think this has been a subject which has been talked about for donkey's years. One-stop shop. You know, we should have a one window, single window clearance, etc. Someone let them not have a single window. Let them have 3 windows. But let them do it in 3 windows. Let them not pass the buck to the state government, pass the buck to the what you call the environment ministry, or pass the buck to the power ministry, etc. Let them have everything done under one particular thing and give the clearances. One. Second thing, the land. Land is the biggest issues. Leave alone attracting international MNC players. Even today, many of the roads are not completed because the last mile land is not being made available to the person who is constructing the roads. And therefore, the project is not completed. So we need to ensure that not only we tell them you come over here and invite them with a what do you call with a garland, but you also show him that you can start off the work within 24 within a month or a couple of months, and see that the clearance is all given. And if you're not giving, also say no. So we have the tendency, okay, we are looking into it, we're examining it, we'll try to get it. I think that is something we have had companies like POSCO waiting for months together and years together and then going away. I think that is something which we need to do. And there, the government, state government, central government all have to join together and say, how do we tackle this forward? Identify the land, procure the land, and keep it. But we have the tendency, I'll procure the land only when the project is agreed. So therefore, you have a chicken and egg situation. So single point clearance, what all can be given, which is bare minimum. I'll provide power, I'll provide access, I'll provide road connectivity, I'll provide rail connectivity, I'll provide land, and I will tell you these are the environmental clearances you need to take, or you should have pollution control. This is the problem regarding the water. You have to ensure that water pollution doesn't take place. You will not cut this. All these things you lay down quickly, but what happens? We look into it and then start raising issues. This cannot happen. This is a problem, etc. I think we need to get over that. If you do this, same thing happens in the banks also. I'm sure many of them will complain. The banks also raise issues piecemeal. But what I'm saying is, if that happens, I think we are going to have a scenario of clearances faster because people are going to come in. China had this policy of a single clearances. You go to the one person, he tells you, okay, give me what all you want. I'll tell you within 1 month whether you can set it up and where. I think that is an absolute must.
Yeah, I think I agree with you on the single clearance and the way China does. But I think what China does, only China can do. In our kind of democracy and federal structure, kind of gets tricky, I guess. But I agree with you. We have to find a way out of this.
No, that's why I said instead of single window, maybe 3 or 4 windows. Let's not put in 17 windows, which may extendable about 39 windows.
Yeah, absolutely. And keep the windows open and don't close the windows. Okay. Let's let's move into the digital transformation, Mr. Kannan. So, what according to you are some of the immediate focus area? Maybe you could spell out a couple of them for the next stage in digital transformation for the banks to be there.
See, I'll tell you one thing is, I was in IBA when we had started what's called digital bank guarantees. Bank guarantees which will be issued without any paper.
Okay.
The stamp duty was paid digitally, and only the test stamp for affix, and digitally the bank guarantee was given to the recipient who accepts it. Yeah. Because it's all with a digital signature. Mm-hmm. Going forward, we expect LCs also to come under it. Customs is already there. Therefore, combining customs with the LCs, or even the in the GST also you have what's called the transport document that can also be attached, and we are already working on it, and we have talked to some of the state governments and the GST Council. So everything will be done digitally. There is no paper movement. There is no documents to be shipped from one place to another. Because today, unlike 25 years ago, the goods reach the buyer before even the documents reach.
Yes.
Therefore, it's essential that the documents are digitally transmitted, and
Yes.
and on the basis of the digitally transmitted document, the acceptance is done digitally, payments is done digitally, the discounting is done digitally, which will ensure that there's a completely smooth way that the payments systems is done in the Indian scenario. This is what we are working at, and maybe it will take maybe a year or two later. But this
Yeah.
is something which will sort of transform the way collections take place and payments. Today, the good old days of drafts has gone, MTs have all gone. So it's basically NEFT and RTGS. So, but we still need to have documents for between a buyer and a seller, and therefore this methodology of LCs and bank guarantee through digital can be done. Maybe we will adopt this new technology. What is it called? What
Blockchain?
the blockchain technology to ensure that there's a simultaneous viewing of the entire process of the transportation of goods, the dispatch of the goods and receipt of the goods and the payment, etc. That will ensure that there is some comfort in the entire process.
Absolutely.
I think this is something which will happen, but in India it may take place a bit faster. But India is one country which adapts very quickly to new technology.
Yes. And we have the advantage of some of the best talents in the IT side. So I'm sure we should take advantage of it. I think this is a problem and an opportunity. And I think we need to grasp this with both hands, with all sorts of support from government and others. So let me take another question from the participants, Mr. Kannan. So this talks about a lot of measures have been announced by the government for easy credit to businesses, individuals, etc. Despite this, why don't we see increase in consumer spending, and why there are not many takers of the loans? Are Indian businesses and consumers playing safe?
I think I had a
You did
briefly
answer. Yes.
touched on. Let me tell you one thing is, if a person is not sure about what's going to happen to his business, he would not take the loan today. Till there is some certainty as to when he is going to reopen, restart. Even if he has got some dues to be made payable, he will say, let me wait for 2 months and then take the loan and do it so that I have some certainty going forward. So that is the issue from the borrower's point of view. From the lender's point of view, also it's the same thing translated. If you want to give to someone, that other person does not have the entire clear picture as to what kind of sales is going to happen, what it is and there, whether he will be in a position to realize it, etc. With so much of uncertainties, I would say the tap is ready, the connection has been given. It's only a question of once the economy starts a little bit, the tap will be open and both the loan will flow into the tap and the water will be taken by the consumer. That is one. Second thing is, borrowers who already been loaded with a lot of loans and they're just keeping their head above water may not necessarily like to take additional loans to overburden themselves. Which is the typical scenario. No, I have a cash problem. Cash problem does not necessarily mean loan problem. If you take loan, you may actually sort of drown yourself in debt. So it's better that you be careful, try to see if there are other means of raising funds, and then go to the bank as the last resort. And banks are always available because the meter starts ticking from the day you take the money. So money will be taken only when you actually need it today, not well in advance and kept it because they don't know how to spend it. And similarly, they will not take it unless they're sure that they will be in a position to ramp up. Because once you have the additional loan, the interest starts ticking. So you have the interest on the existing loan, interest on the new loan also. That has to be paid. Even if the principal has to be paid over a period of time, the interest is paid. That means you have double the interest you have to pay. And therefore, he need to ensure that he is in a position to recover it. But wherever he is in a position to start in a calibrated way, I think they will also draw in a calibrated way. Banks are, that's why they have given this 10% and 20% was made offer. I talked to many of the bankers, they said most people have not taken it. They're all agreeable to take it, but most people have not taken it. But they said they'll wait for the announcements of the lockdown to be relaxed in a gradual manner before they take the call.
Okay. So let's move a little bit away and look at cyber security, okay? Which is, of course, one of the most paramount issue that bankers have to face. Cyber security is also my favorite topic. So I often quote Rob Mueller, the ex-FBI chief, who said there are only two types of companies, two types of organizations: those who are attacked and those who are waiting to be attacked. In India, 69% of firms face serious cyber attacks, and banks included. Some of the banks that we already know are, which is in the internet, is Cosmos and UBI and many others. How, according to you, is the Indian banking sector geared up for the one step ahead of the cyber criminals? Are we there? Are we ready for that?
In fact, I would put it the other way is, providence, and maybe we are lucky that we have not really had much of a major issues. A few incidents have happened, which has been blown up by a big way, but the volumes are nothing compared to the total volumes in the market. But we are really having a major issue. But in the case of cyber, whenever I have interacted with anyone, there's nothing called prevention. At best, you can be cautious, you can take some precautions, etc. But the most important thing is detection and trying to find out what are all the ways, different ways people have been doing it, and trying to see whether you can plug that in the meantime. And in the event you have had a loss, how fast you can recover. So because that is the issue which we are facing is, we have to be in a position to recover the money quickly, detect the losses and do it. And that is where, because of so much of digitalization, many people are totally not aware about what's happening to the account. Today, if all of us are conscious about what's happening to your accounts on a continuous basis, I think that itself, the best security is if every individual is conscious about the security, then automatically there will be security, and that's going to be an attempt of fraud or something which has been done. So we saw it recently in the case of cloning in Delhi. So some cards in a particular branch of ATM got cloned. So immediately there's a big hue and cry, and they could trace more than 60% of it quickly because they were in a position to find out who was the person who came. But now with this COVID, that's also an issue because most people who go to the ATMs go with a mask. So you don't really know how to do it. Maybe there has to be something that in front of the ATM, you have to remove the mask and then open it and then start it. Otherwise, you're going to have another problem. But cyber security, at best, you can be, I would say, not fully preventive. We can be cautious. We are trying the hackers are always one step ahead of us, and we always find they always find new means. And that's about it. I would say that, cyber hacking is not something which we have to live, just as we may have to live with COVID, we may have to live with the cyber hacking. But we have to be better prepared on the ways of where they are attacking us.
Absolutely, Mr. Kannan. I think security is never 100%. I mean, that's something nobody can guarantee. But I think I may add to one of the suggestions that you have given is that I think awareness, cyber security awareness has to be brought about. We all know we do fire drills every quarter or once in 6 months or maybe once in a year. But at least we do that. So people are aware that in case there's a fire, this is what you have to do. Nobody does a cyber drill, So awareness perhaps is something that perhaps we need to bring in, and that may kind of mitigate cyber attack and losses on the cyber attacks. Another question I want to ask from one of the participants. Well, you should be able to guess from whom this has come. Cash deposits are growing with small and retail merchants. Are PSBs ready for interoperable cash deposit through cash recyclers?
I think as of now, if I'm not mistaken, I think cash recyclers are they're restricted to only one particular bank. What you are saying is you want interoperable cash recyclers.
Yes.
Maybe going forward, it will be there. It all depends on how it pans out. And there are some issues about how to credit it, and also what is the charges, who is to do it. In future, I think it might happen. But I would actually say the small merchants also should be educated like the Puneites to take up UPI and digital banking. In fact, the other day I went to pay 500 rupees. He says, I don't have money.
Ah,
So actually, I have to then again take out my card and then use it. So maybe the good days will come when people will start using non-cash, and the small
yes.
shopkeepers also may be incentivized to do this, because it's very easy for him to make payment, and he also will not be robbed also, enrolled to the bank or etc. But there's no solution. Yes, maybe recyclers, what do you call, as you suggested, interoperable will be there. But as of now, I think there are some, I don't know whether the concerns are from the banks or from the Reserve Bank, but we don't have that going so far.
Okay. Thanks, Mr. Kannan. We are almost coming to the end of our session. We have another 3 or 4 minutes left. So we generally open up for a direct question to you. It could come from any of the channels. So can I, if anybody wants to ask a direct question to Mr. Kannan, can you please raise your hand? The back office can kind of help you to put the question directly to him. There was a hand raised. Okay, let me come back to this one, to this question that we talked about. You said 2 incentives are required. Okay, one is 2 things that are required to kickstart the economy. One is the incentives you talked about, and you talked about payments, receivables. That means payments coming from the government is not happening. So I would not be too inclined to go with any kind of schemes for the government funding kind of stuff. But recently, the government has announced a lot of good things for the MSME, including kind of a collateral guarantee from the government. So, would you then would you be encouraged to give help out the MSMEs who are in this crisis, though there is no collateral from the MSME, but it is guaranteed by the government?
Let me tell you one thing is the banks had a lot of funds. So funds was never a problem. So it's not a question of, they were a bit uncomfortable because going forward, they are not sure whether the repayments will come in view of the high degree of uncertainty. And as I told you, the existing debt. And therefore, with this guarantee, that there is some comfort.
Yeah.
That there's a default, then the government will make good of it. But again, as I told you, that point about the borrower himself, he'll be a bit cautious taking it unless he's sure that he is in a position to repay it. Therefore,
Right.
it is like, both the hands have to come together to have a good clap. So the borrower and also the buyer. A lot of people have been saying that I want this. When I talk to the bankers, I talk to some of the CEOs of banks, he says, there are a lot of people saying, "Humko chahiye," when we have actually, most of the bankers have issued that sanction letter for the 10% and 20%.
Yes.
Very few takers.
Oh.
So it doesn't mean that the guarantee was only the reason for not doing. Yes, beyond 20%, the banks would have felt a bit uncomfortable, and therefore the guarantee is a welcome feature. And if it comes, it will certainly nudge them to give the loans, because by guarantee, its capital adequacy doesn't get strained, and the risk capital is not blocked there. Therefore, it is a very, very welcome feature. Wherever there is demand, I think they'll freely start lending.
Thank you, Mr. Kannan. That's nice. So we have already reached. With your permission, Mr. Kannan, can I extend it by say about 5 minutes, because there are 2 participants who want to ask questions directly to you.
You are welcome. You are welcome, sir.
Okay. So the first participant, can you
sure, welcome.
Yeah. Can you please put up your hand, and can you please unmute and ask the question directly to Mr. Kannan?
Sir, with the major consolidation of banks happening, what do you recommend other major reforms to boost the economy in terms of the demand, which you have mentioned earlier?
Can you just send me the last sentence? What is the major reform?
Apart from the consolidation of banks, what are the major reforms required to boost the economy and increase the demand? Thereby, there is a growth assured for the government as well as for the economy.
I told about 2 things. One thing is, you have to kickstart the economy. There has to be money in the hands of the people, which is expendable within a short time. If you give money to some people, they actually put it in a bank, into the bank deposit. So it doesn't make sense. the money has to be spent. So if you have some sort of a coupons which is expires within 2 months or 3 months, which will not be used for A, B, C purposes, but will be used for other consumption, that will kickstart the demand. The second thing I told about the payment systems. The payment systems, the more and more digital it is, and therefore it becomes easier for them to do this. On the consolidation front, I think all the banks have to get the house in order, because they are still, the consolidation on paper has taken place. So we need to have all the systems together. Once these systems are together, I think they will be in a position to extend it. On one area which I would like to actually have the government reforms indirectly is the legal systems. The legal systems has to be ensured that the delays which take place indefinitely is stopped. IBC as a process has been successful because it has limited and also ensured that the borrowers are careful about the large ticket borrowers. But even today, there are a good number of borrowers who would prefer that the bankers take them to the court, and the litigation goes on for 7 to 8 years and 10 years. I think some sort of a time limitation on that, if that is brought about, that itself will be a major benefit to the banks as a reform from the government to ensure that the legal process is reduced to considerable extent. That I would say has to be one of the biggest. As far as the bankers are concerned, one more area which I want is, today the public sector bankers are barred from taking full-time specialists or taking campus recruits. So they can take them only on a contract basis. I think we need specialists in the case of risk management, in the case of HR, in the case of agriculture, in the case of international banking, etc. I think those are all they should permit, and they should leave it to the bankers to do what is the best, rather than sort of give them guidelines as to why this should be done in this particular way.
Thank you, Mr. Kannan. There was one more person wanting to ask. Can you quickly ask, please? We are already short time. Okay. So, Mr. Kannan, we won't hold you back. We already are exceeded our time. Thank you once. Thank you for coming. And it was a wonderful talk today. We had to, and banking is one such topic we can go for hours together. There's so much to talk. And I know we would want to invite you once again. And so for this kind of a discussion, it brings the participants also drawn into it. So let me, on behalf of EPS and the entire crew of EPS, thank you for coming, and I hope to see you soon in the near future. Thank you.
Thank you, Mr. Krishnakumar. Thank you, Mr. Tyagarajan and Mr. Mani. And thanks a lot for all the others who are tuned into this. I think banking is a thing which will stay and will probably be the major catalyst in the economy going forward.
Thank you. Thank you so much.
Thank you. Thank you, sir.
Thank you.